Hey guys, welcome back to my channel. Today I just want to do a real brief video on term structure. I have another video that's posted about volatility skew, if you're unfamiliar with that, the volatility smile, the curve, the realization that different strike prices on the same underlying asset do trade at different implied volatilities in the market. So real quick, when someone talks about term structure, they're basically referring to the volatility curve in relation to different expirations. So this is Duke Energy. It really doesn't matter what stock you're pulling up here. And you can see we have a December, January, and April expiration pulled up. Duke Energy right now is about just a tad over 91 bucks. So you can see here, right in between here is the at the money strike. So let's say you want to sell a covered call. You're already on the underline, so you're looking at these, and you go, well, April is, it's not much difference here, but it does trade at a higher implied volatility than January, December. So of course, if you're selling something with a higher implied volatility, all else equal, that's a real good thing. So now, we do have interest rates and dividends and other things that factor in here. So it's not to say that this is like a market mispricing or anything, but it is important to look across expirations, particularly if you're setting up things with weekly underlines. Like I'm just pulling up spiders here. Actually, let's just go with like Apple or something a little simpler, because all the daily expirations are now being traded the Monday, Wednesday, Fridays, and SPY. So we can just pull up, kind of deselect these, make it not so busy. And again, this is a graph. You can just have basically kind of a chart that shows you the at the money implied volatilities at every expiration. That's real useful too. Some brokers provide that capability, but here's just the graph, which allows you to see the skew and everything as well. So in terms of picking your strike price as well, things do tend to get really bunched up near the money here. So let's maybe dump a couple of these just to kind of look here. Again, pretty bunched up. As you go further out, you do see that bifurcation here. You went with one further out. In this case, is a little bit cheaper. Both on the downside and the upside. Depending on what kind of trade you're placing, this can be helpful. Really, the thing that looking at the term structure is most useful in is setting up calendars, calendar puts, calendar calls, or some type of diagonal, because just the basic premise of a calendar is you're using different expirations. So if you can sell in a true calendar, not diagonal, you're selling and buying the same strike price. So if you can sell a higher strike price and buy a lower, sell an implied volatility at strike price, and then buy a lower volatility at a different expiration, that gives you a little mathematical edge. So you'll see a big term structure difference when it comes to earnings and things like this, where it'll be the implied volatility of those options, and that expiration encompasses the earnings will be much higher. So there's things you can do with that, but that's basically all term structure is. It's just comparing the different expirations. Just at the money, or you can kind of, this graph is a good thing to just kind of throw in the skew as well to show those, but you can see here, when we go further out, because we're in the weeklies a minute ago, this is just on Apple, kind of that at the money right here. So you can see that, let's say, there were no other considerations, it'd be more advantageous to, sell a call against long stock we owned, up here, going a little further out in September, just because, we're at, you see on the right hand side, it's like 35% as opposed to, 29%. About a 6% difference there in volatility terms for the same strike price. So that gives a little mathematical edge. So that's kind of what we're talking about. We're talking about term structure. I did want to keep this video short. So if you have any other questions, comments, if you want to know, as it pertains to term structure, just leave them in the comments section down below. I do check that, and I'll try to respond as soon as possible. So until next time, just stay safe, and we'll see you soon.